If your business is drowning in debt but still has a fighting chance, a pre-pack administration could be the secret weapon that saves it. Too many directors I see panicking when the pressure starts to get hot up, and they either throw in the towel too soon or they make bad decisions that end up costing them in the long run. Now, a pre-pack admin can give you a legal, structured way to restart your business, protect jobs and keep trading if you do it properly. Now, if you ignore the options, you could end up losing everything. But if you get it right, you can walk away with a fresh start, a viable business and a way forward. I've worked with business owners who thought they had no way out, creditors breathing down their necks, suppliers refusing to deliver, and HMRC demanding repayment. But by using a pre-pack administration, they were able to move past the financial mess, keep the best assets and rebuild without dragging the debts with them. It's not a loophole, it's a strategy that can save the right business. Now, in this video, I'm going to break down exactly what a pre-pack admin is, how it works step by step, who it's for, and whether it's the right move for your business. So stay with me to the end, because this could be the difference between saving your company and losing it all. Chris Worden, I'm from Director First, and today we're breaking down pre-pack administrations, one of the most powerful business rescue tools available. Now, if your company is struggling with debts, but it has a strong core business, this could be the answer that you've been looking for. Now, we're going to cover what a pre-pack admin is, how it works step by step, the pros and the cons, some real life success stories, and how to know if it's the right move for you. So, let's start. Let's kick things off with the basics. A pre-pack admin is like hitting the reset button on your business. Now, here's the deal. It's like a special type of insolvency process. The sale of the business is agreed before an administrator is appointed. Assets are sold into a new company, often owned by the same directors, and it allows for a seamless transition and continuity of business operations. Think of it as a way to save the core of your business while dealing with overwhelming debts. It's about giving your company a second chance to thrive. Now, the pre-pack admin process goes something like this. The first thing is, obviously, your company's facing financial pressures. You've got mounting debt, cash flow problems. Let's give an example. You're behind with your HMRC, you're on a time to pay arrangement, and you miss your next VAT return, therefore breaking time to pay arrangement. You've took lots of debt on post-COVID that at the time sounded like a good idea because business was booming. Now in 2025, revenues are dropping, people are taking longer to spend money. And what that's causing, it's causing your business cash flow to be strangled. You're probably going to be going out there looking on Google, asking for a referral from your accountant, or watching someone like me on YouTube, and you make an inquiry. So the first step is, are you insolvent? Can you pay your debts when they fall due? If it's a no, you fail the cash flow test. Are your liabilities more than your assets? If they are, you fail the balance sheet test. And if somebody's taken legal action against you, be it a CCJ stat demand or God forbid a winding up petition, it's another indicator to say that you're insolvent and you need help. So you need to consult with an insolvency professional, and you need to go through absolutely everything and understand whether a pre-pack is the best option. Now, really, when I speak to somebody, I go, right, tell me what's going on. Tell me everything. Tell me all the debts. Tell me the assets. Tell me the story that's behind you picking the phone up to me. And tell me where you want to get to. And can we get from A to B legally using tools in an insolvency practitioner's toolkit? Now, if we can, and one of those options is an administration, you're going to need to get your business and assets valued. And we'll introduce you to an independent agent who will conduct a valuation report. And they'll go for everything with you. They want to know your financials. And eventually they'll put together a report. And the key things on the report are, what is the business worth? And they'll break it down item by item. plant machinery, stock, vehicles, work in progress. And there'll be an in situ value, and that's what they believe it's worth to you as a director to buy it back and essentially start again. And there's an ex situ value. And the ex situ value is what they believe that it'll probably be worth if it goes to auction. Your ex situ is always lower than your in situ. And bear in mind, if you are looking to do a pre-pack and buy your business back, you want your offer for that business to be closer to the in situ value. Now, once you've had the valuation carried out, they're going to try, the administrator and the agent are going to try and find a buyer for your business, okay? Now, what that'll normally scare the life out of most directors because they think somebody's going to buy their business from under their noses. Now, the reality is, I've been doing this a long time. It never happens. People don't buy businesses on 10 days due diligence. And that's what these marketing periods are normally like, the 10 days. And what happens is the agent that you're dealing with will send an email out to his database. And yet people might ask questions, but the idea, if you're the director, is you want to buy this back pre-administration. And once the marketing period is over, you will make your offer to the agent, okay? The insolvency practitioner stroke administrator will be involved. There'll be someone helping and sort of advising you through this process. But if the agent accepts your offer, contracts are drawn up before the admin begins, and then the administrator is appointed and they oversee and finalise the pre-agreed sale. There is a little bit that I actually forgot there. Let me just wind back a few steps. You as the director will need to speak to an independent adjudicator, so another insolvency practitioner, and you will have to pay for this report, about 1,500 quid to 3 grand. And it's essentially another insolvency practitioner agreeing that this is an administration, okay? Now then, once you've made the offer, the administrator gets appointed, the sale completes immediately. So it's a smooth transition to the new company. Now, and that's it, okay? Now, the key to this is speed. The whole process can be wrapped up in a few weeks. So bang, old company's in admin, new company starts again. Now, there are obviously a lot of advantages to a pre-pack. And let's talk about why you might want to consider the option. I mean, obviously, it's a speedy thing. There's a quick transition means minimal disruption. You're obviously going to preserve the value in the business. It protects the company's worth and reputation. You're going to save jobs. That's a huge thing. Because in most cases, employees are transferred to the new company. And this is an important one. An administration, in almost all scenarios, provides a better return to creditors than putting the business into liquidation. And obviously, you get business continuity. You keep serving customers without any interruption. It's all about giving your business the best chance to survive. Now, I wouldn't be me if I didn't tell you what the drawbacks are. Because listen, I'm all about finding solutions, but we've got to look at both sides of the coin. There are some potential downsides. You've obviously got to fund the purchase. You're going to need the money to get it off the ground. And maybe you'll be asked to find £10,000 to £20,000 up front. And then, remember, you're going to have to pay for your assets. Now, in almost all scenarios, you'll get some terms to purchase the assets from the insolvency practitioner. But you've got to get that agreed up front, gang, okay? Creditors are going to lose out. Even though in an admin, you're going to get a better return to them than a liquidation, some are going to feel that it's unfair, especially unsecured creditors, because they are, in most cases, they're going to feel the pinch. If you've got a charge against the old company, they'll get paid first. It's highly likely once it gets to unsecured creditors like suppliers, they're not going to get anything. So, there could be some reputational damage. A public perception can be negative of businesses that do this. And obviously the strict regulation. You've got to prove it's the best option for creditors. It's not a magic solution, gang. You've got to weigh the pros and cons carefully. So I want to now break down who the key players are in a pre-pack. Now, obviously you, company directors, you initiate the process. Then you're going to need an insolvency practitioner. They're going to guide you through the legal maze and actually oversee the process. Then you need an agent, okay? Remember, we'll introduce you to an agent who will be able to value the business. And the agent is going to be able to accept or decline any offers. Remember, creditors are involved here. Creditors will be informed after the sale is completed, and you've got your employees, and they're often transferred over to the new company. So you're not alone in this. You've got to get the right team to guide you through it. Now, I want to talk about legalities because there are some important rules to follow, right? With staff, 2-pay regulations. 2-pay protects employees' rights during business transfer. You really need to seek specialist advice here. And obviously we need to talk about creditors' interests. The deal must be, we must be able to demonstrate that any deal is in the creditor's best interests. There's going to be a marketing period for the business, and this is to prove it was sold at market value and other people had an opportunity to come in and buy this business. And there's going to be a number of disclosure requirements. An administrator must fully explain the sale to any creditors. So do not cut any corners here. You've got to follow the rules and you'll come out stronger. Now, next thing I want to talk about is a pre-pack right for you. How do you know if this is the right move for your business? I want you to ask yourself these questions. Is your company insolvent, but is the core business viable? Can you raise some funds to purchase the assets? Are you prepared for the potential reputational damage it's going to cause you? And have you explored all other options? You know, have you looked at raising finance? Have you looked at informally negotiating with creditors? Is a CVA suitable for you? And will it provide the best outcome for creditors? Now, if you're nodding your head, a pre-pack admin might just work and it might be your best option. So, if you think it's time to take action, if you're considering a pre-pack administration, the key is seek advice early. Pick the phone up to us today, okay? ASAP. The earlier you start, the more options that you've got. Be transparent, open communication, avoid issues down the line. Plan for the future. How are you going to run the new company differently? If your business has become insolvent, why? What's happened? You know, you can't just do this, take it into a new company, not learn the lessons because you're going to fall over in the future. And listen, honestly, just try and stay positive. This is a chance for a fresh start. Tough times don't last, but tough business owners do. You've got this, all right? Now, if you need to speak to somebody today, my advice is free, it is independent, it is impartial. I have worked with thousands of business owners over the years, and hundreds of them have left me reviews over on Trustpilot. Please, please, please don't stay in your own head today. Pick the phone up. I guarantee you speak to us, we'll give you a better night's sleep tonight. Thanks for your time. God bless. Chris Worden, Director First.